Welcome to Talk Tickers. We're the podcast that cuts through the noise of earnings calls to give you, the investor, that edge.
That's right.
Today, we are diving deep into McGrath RentCorp's first quarter 2025 earnings call.
And it's definitely a story of contrast this quarter, and maybe a little bit of caution looking ahead.
Okay, let's get into it. Give us the quick snapshot first. What were the headline numbers?
So overall, total revenue came in at $195.4 million. That's up 4% year over year.
Okay, decent growth.
Yeah, and the adjusted EBITDA was also up 3%, hitting $74.5 million.
But you said contrast, so it wasn't all smooth sailing.
Not exactly. The different parts of the business had, well, quite different results, and management definitely reflected that in their updated guidance for the year. They're sounding a bit more cautious now.
Right, so let's break that down. Where was the real strength coming from?
The clear winner, the standout performer, was Mobile Modular. Definitely.
Okay.
Their adjusted EBITDA jumped a full 10% compared to last year, reaching $47.6 million. And rental revenue within that division was up 3%.
And what was driving that? Specific sectors?
It seems pretty broad-based, actually. They mentioned strong results from both commercial clients, think government, tech, healthcare, and also the education sector, both public and private schools. So flexible space solutions seem really in demand right now.
And I heard it wasn't just about signing standard rental deals. They had some other initiatives paying off too.
Exactly right. Things like Mobile Modular Plus, that's their offering, with more services and equipment bundled in, saw revenue climb to $8.6 million. Up from $7.2 million last year. And site-related services, another add-on that grew nicely too, to $4.1 million from $3.2 million.
So even if they had fewer units actually out on rent,
which they did slightly,
these extra services helped boost the overall revenue.
Precisely. It shows they're, getting more value out of each rental contract they sign, really monetizing effectively.
Interesting. So making more per unit, how much more?
Well, the average monthly revenue per unit on rent saw a pretty healthy 8% increase.
Okay.
And even better, for units that went out on new shipments in the last 12 months, that figure jumped an impressive 12%.
Wow. That points to some solid pricing power, doesn't it?
It really does. Now, they did mention that the growth rate for that new shipment revenue per unit slowed a tiny bit from the quarter before. But overall, it's still a strong signal that they can command good rates for these modular buildings.
Okay, let's shift gears a bit. TRS-RenTelco. I seem to recall that segment was struggling a little. Any change there?
Yeah, that's actually a pretty significant development this quarter. TRS-RenTelco saw its total revenue increase by 4%, hitting $35 million.
Okay.
But the really key thing is that their rental revenue ticked up slightly. It doesn't sound like much, but it's the first quarterly increase they've posted since way back in Q1 2023.
Right. So after, 2 years of decline or stagnation?
Exactly. So it suggests, maybe a turning point. Could be market improvement, could be internal efforts paying off. They said the improvement was broad across equipment types too, and the rental pipeline looks better.
What do they think caused that turnaround? Any specifics?
Well, a couple things. Management pointed to some previously delayed projects finally kicking off.
Okay.
Plus, they highlighted their own efforts in managing the fleet effectively. And you can see that in the utilization rate, it jumped quite a bit, from 59% last quarter up to 65% now.
That's a good jump.
It is. And another interesting point, the semiconductor and computer part of that business, which had been, a weak spot, that actually showed strong growth this quarter. So maybe a key end market is picking up steam.
Okay, that's definitely encouraging for TRS. But you mentioned contrast earlier. It sounds like portable storage didn't share the good news.
No, unfortunately not. Portable storage had a pretty tough quarter. Rental revenues there dropped by 13%.
Ouch. Why the decline?
It seems to be mostly tied to continued softness in commercial construction projects. That means fewer units going out on rent and lower average utilization for the ones they do have.
Got it.
And there's also some pressure apparently on the margins for their rental-related services. It seems like some competitors might be adjusting their fees, putting pressure on pricing.
So a real difference compared to Mobile Modular.
A stark contrast, yeah. It sort of raises questions about maybe where the market focus is shifting.
Definitely. Okay, so with these very different segment stories, let's zoom back out. What does the overall financial health look like? Debt, spending.
Sure. Their net debt is sitting at $559 million.
And the key ratio.
The funded debt to adjusted EBITDA ratio looks pretty comfortable, actually. It's at 1.58 to 1. Generally, anything under 3 is seen as quite healthy.
Right. So they have capacity.
Seems like it.
Yeah.
And related to that, their planned capital spending on new rental gear for 2025 is actually lower than last year. They're projecting between $115 million and $125 million.
Which makes sense if utilization isn't maxed out everywhere.
Exactly. It suggests they're generating good cash, can pay dividends, manage the debt, and still have flexibility, maybe for strategic moves.
Okay, but despite some of these positives, you mentioned management sounded cautious about the rest of the year. What's driving that caution?
Yeah, they updated their full year guidance downward slightly. They're now expecting total revenue between $920 million and $960 million.
EBITDA.
Adjusted EBITDA is now forecast between $343 million and $355 million.
So pulling back expectations a bit, why?
They specifically mentioned concerns about potential demand softening in the second half of 2025. They listed a few factors, just general economic uncertainty, potential impacts from tariffs.
Tariffs came out.
Yeah, also just overall economic growth trends, and even the possibility of, government spending cuts. So it feels like they're just trying to be prudent, maybe bracing for some potential headwinds.
What's the story with tariffs? How exposed are they?
Management seem to think their direct exposure for this year, for 2025, is fairly limited.
How so?
Well, partly because they already own a lot of their fleet, right? And they also did some pre-buying of materials. However, they did acknowledge that their suppliers might face tariff impacts, which could lead to price increases on new rental equipment they buy down the line. Some of their 2025 spending is locked in, but it's still, an indirect risk factor for costs.
Got it. And you mentioned flexibility earlier, maybe for strategic moves. Did M&A come up on the call? Mergers and acquisitions?
It did, yes. They stated they have an active M&A pipeline. They're looking at possibilities, apparently ranging from larger deals to smaller sort of tuck-in acquisitions that would just add on to their existing businesses.
So growth through acquisition is still on the table, despite the caution.
Seems so. They really emphasize their belief in the resilience of their overall business model, their diverse customer base, and their experience navigating downturns before. M&A seems like a clear part of their strategy moving forward.
Okay, so wrapping this section up, investors are looking at McGrath and seeing what? Strong modular performance, a challenged storage segment, a hopeful sign from TRS, but this overall cautious outlook from management due to the economy. What are the key takeaways?
I think the first big takeaway is that divergence between mobile modular and portable storage. It really signals something about market demand right now. Flexible space is hot. Basic storage, especially commercial, less so. Investors need to watch if that gap widens or closes.
And TRS?
The TRS-RenTelco recovery is definitely positive news after such a long slump. But the question is it sustainable? We need to see more than 1 quarter of improvement to be sure.
Makes sense.
Then there's management's caution. That updated guidance, citing economic uncertainty, means investors will likely be watching those broader economic indicators and McGrath's project pipeline really closely in the coming quarters.
And M&A.
M&A is the potential wild card for growth. If they make a smart acquisition, it could really boost things. But execution and strategic fit are key. So, it's a balance. Well, modular strength and the TRS potential are positives, but the storage weakness and the conscious outlook definitely warrant attention.
Okay, great summary. Now, let's pivot to our regular segment. This is not financial advice. Based on everything we've just discussed about McGrath's quarter, what's an outrageous but plausible trade idea you've cooked up?
All right, here's one. We saw Mobile Modular doing really well, right? And specifically, strength within the education rental market was highlighted. And you hear talk about potential infrastructure spending down the line, which could further boost school construction or renovation needs.
Okay, where are you going with this?
So instead of investing directly in McGrath, which is diversified, what if you looked for companies that are much more focused, maybe even pure plays, on designing, building, and leasing modular buildings specifically for the education sector?
So betting on that specific niche that seems strong within McGrath.
Exactly. The idea is that the growth drivers helping McGrath's education business could be even more powerful, more amplified in a company that only does that. It's taking a specific positive signal from the McGrath report and trying to find a more concentrated way to play it. Outrageous? Maybe, but plausible if that education trend holds strong.
Interesting angle. Definitely leverages a specific insight from a call. Okay, that wraps up our outrageous trade idea and our deep dive into McGrath RentCorp's Q1 2025 earnings.
We've hit the main results, dug into the segments, and considered the outlook.
A lot to chew on there. Remember, everyone, this conversation is purely for informational purposes. It is absolutely not financial advice.
Definitely not. Please do your own research before making any investment decisions. But we are curious about your take.
Yeah.
What do you make of the different trends in McGrath's business? How much weight do you put on that cautious outlook?
And if you want every single detail, the full earnings call transcript and the investor slides are always available online. Definitely worth checking out.
Absolutely.
Join us next time on Talk Tickers, where we'll break down another key earnings report.